So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. About Solaredge technologies, they slumped a lot, around about minus 20% after releasing the Q3 figures. Solaredge Technologies is committed to develop of intelligent energy products such photovoltaic and software solutions. And the company was founded 2006 in Israel. So to give you an impression about Solaredge Technologies, I used the high growth investing analysis of the 6 KPIs. For every KPI you can get 0 to 3 points depending on the value that we calculated for the specific KPI. Here above you will always see the point for the HGI score. And yeah, let's discuss the 6 KPIs, and at the end I will, or let's say you will have an impression about the stock, and yeah, maybe it could be something for your watch list, as I already put them on my watch list, and it's a very nice opportunity, possibility to buy in after slumping by minus 20% roundabout. So let's get started. The enterprise value divided by the sales actual. So screenshot in Yahoo Finance 8.5. We are above, or let's say we are between 8 and 10. So we got 2 points. So the measure is let's say it's a measure of the value of a company regardless of its financing, and you can get an important ratio for estimating the valuation of a fast growing but still loss making technology company. And you also find the figures like the market capitalization, the cash and the debit and the revenue in Yahoo Finance. And we came up at 8.5. So 2 points for Solaredge. The next point, cross margin 32%, as we use the sales minus the direct costs divided by the sales. So the cross margin is this percentage of sales remains with the company after reducing the direct costs, and it provides us also a good indication of the profitability of the business model. And the higher the percentage, the more money a company has available for other activities like sales, marketing, developing new products, investing in engineering and all the stuff. So here not so much money for additional activities, 0 points. Next one, rule of 40. That's quite a nice, or let's say in simple key figure for assessing the efficiency of a company growth and the quality of its business model. So the ratio is calculated as the sum of sales growth and the free cash flow margin. And the higher the value, the better the business model of a company is. Everything above 40 could be considered as attractive. We have 58%, 3 points, as we are above 50. So that's quite a nice indicator that we are talking about an high growth company. The sales growth, trailing 12 months, 45%, 3 points, as we are above 40. Here also screenshot from the development from 2016 until 2019. Quite a nice development in terms of revenue as well as in terms of earnings. And the debit ratio 0.05, so the debit ratio is calculated by dividing the sum of the current and non-current liabilities by equity, and we use the last quarter figures from Yahoo Finance, and a debit ratio less than 1 indicates low debit, while a debit greater than 2 can indicate possible risk for the main company. So here we have quite a nice financial situation. 0.05, 3 points. Last but not least, the PEG is one of the most important key figure for the assessment of an already profitable growth stock. So it calculates the ratio of price per earnings divided by the profit growth, and if the ratio is between 0 and 1, it indicates an under valuation of an stock. So that could be a nice opportunity to invest in a share of Solaredge. Here we have an PE of 83, as you can see here, trailing PE divided by the profit growth, trailing 12 months, 26%. So we end up at 3.16. So 1 point, as we are between 2 and 4. Here we have also the overall sales growth within the last years. And yeah, finally we came up at 12 HGI scores, or points, let's say. 3, 3, 9, 10, 12, yeah, that's right. And Solaredge stock falls 15% on Q3 sales miss and weaker Q4 sales guidance. So that is why, from my point of view, it could be a very nice opportunity to, let's say, buy into Solaredge technologies. In addition to that, and that is why I assume that the Solaredge after consolidation is a very nice opportunity for us. The fair value by Peter Lynch, I also took a look into the EPS last 5 years. So if we take a look into the EPS in 2017, we have 1.85, and the estimation for 2021 is at $5 EPS as an estimation. I just compared the current estimation for year 2020, 3.77 compared to 5. We end up at 67%. Multiply by the EPS, so we end up at a fair price of 339 compared to the current value of 218. Let's take a look into this week how they will consolidate and where the bottom is. And yeah, then from my point of view, it could be a nice opportunity to invest into Solaredge technologies. Yeah, I hope you enjoyed the quick update. Please feel free to hit the subscribe button below. Also hit the push button to get an alert when I put a new video into YouTube. And yeah, I would really appreciate if you become part of the Monkey Stock Club family, and it helps me also to increase my subscribers, and also the let's say establish a nice community. So yeah, then have a nice day, and hopefully we will hear each other again. Bye bye.